Good evening, guys, and welcome back to another episode of the series within the weekly Watchlist. So this week, this will be my third episode. Unfortunately, last week I had to miss it due to travelling back from home to uni. Unfortunately, I had to miss it, but through my Instagram and my members chat, I still managed to get a few moves out, and we still managed to catch a lot of pips. So as normal, I'm going to start off with taking you through two of the setups that we are in. Both very good setups, one in which the whole community actually sort of analysed together and we managed to get in, and then the second is one that a few of us took ourselves. So we're going to start off with CAD JPY. So CAD JPY, it's always a pair that I quite enjoy trading, something that I find quite a lot of luck in, quite a lot of success, which naturally there'll be some pairs that you have better success than others. So if we look at this on the daily time frame, we can see we've got this ascending trend line. We have this one touch, two touch, three touch, and then sort of we just see it sort of hovering, and sort of for a week or two, it's just sort of hovering on this trend line until it sort of makes this high, and then we have these candlesticks here, and we see this fake out of this new high. So this new high is formed, and then we fake out of that and then start coming through. So what we have here, obviously we have this break of trend line. If I just extend this slightly, we have a break of trend line. If we look on the lower time frames, we did get a retest. Apologies in advance if there's any fireworks go off in the background. I can't really help that, but I'll try and sort of speak as loud as I can to make sure you can hear over that. So you can see here, we did sort of retest this significant area here, so this previous high. We retested it before making this massive move to downside. So if we go back onto the daily, let's have a look at this trade in more detail. So as you can see, we got a really nice entry actually, sort of not really any drawdown. So we entered around 83.179 with the stop loss of 59.5 pips. It's quite conservative. Plus we could have had about 10 pips shorter for a 49 pip, but the risk was managed appropriately and we took the trade. So the take profit is at a big 467.9 pips. As you know, I quite like to swing these trades and sort of make sure to grab all the momentum I can. And just because it was my lifestyle of uni, with work, with all the stuff I've got going at the moment in terms of creating content for you guys, whether that's the IWF community or for my personal members, there's a lot going on. So I like to be swing based and sort of not be staring at the charts all the time and just have confidence in my setups. And then once they're risk free, just let them run and take profit at each area. So the first sort of major area is this 82. So this is around 100 pips. We did in fact touch it, and then we have seen this sort of retracement. It's a bit of correction. If we go back onto a lower time frame, so go on the 4 hour, we can see we touched it, come back up, and then we sort of had this almost shooting star candle, not quite finished on a shooting star, but we have got this huge wick to the upside on this liquidity area, which tells us that price isn't really looking to push higher again. However, we will need to see a break of this 82 for any further downside movement. The next area of confluence for me is this next touch of the trend, or this near touch of the trend line. So if we actually move this up slightly, so let's move this back here, we can see that we've got this touch of the trend line on the left around this area, and then we sort of have this sort of area of price here that we see consolidates here, and obviously this would be my next area. So this would be 80.672, which at this point would be around 250 pips, of course, which is about halfway to our target. If we go back onto the daily, we can see so that's where we was before, and our next sort of price would be the next touch of the trend line, or this 80 key level. 80 we know that price sort of magnifies to, it's quite a psychological level, so therefore it's obviously another major area. And then also we've got these two levels at the bottom. So obviously I'm looking to hold this one. I've got my stop loss now at break even, so we can forget about this stop loss. We can move this down and be risk free. So as you can see, there's quite a lot of potential in it. I really like it, and of course we manage and look for scalings when possible. So on my MC4 at the moment, I am running sort of 80-90 pips at the moment, and hopefully tonight we see price sort of show us or continue from that wick to the upside on Friday. So That's sort of what I'm looking for on CAD-JPY. It's a really nice trade so far. I'm just giving that to the community. Now, a trade that I really did like, and I think the whole community got on, and you might notice that my charts are a little bit cleaner. I've tried to clean them up a little bit for you guys and make them sort of cleaner and easier for you to understand. So if we look here, we have this structure here with this descending channel, and then we also have this channel here, this ascending channel. So descending trend line, ascending channel here. So you can see 1 touch, 2 touch descending trend line, and then 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, and then the 6th touch is where we sort of break through. However, I use a different strategy for this one. I actually used the RWF trade strategy to catch this entry. So what I had was, we had this trend line, of course, and then what I wanted was this break of the channel. So then normally, or I used to probably go off the break and retest of this trend line. However, I wanted to go for a slightly different approach based on the strategy I've been watching the Ollie's obviously produced. So what we have here is break of the channel. We come down, we make a new lower low. So in this case, obviously, we've got this sort of higher high created here, lower high here, or here, and then obviously this lower high wasn't actually formed because it broke through, and then we've got this lower low here, which is equal to a previous low. So now what we do is we place our fib. So obviously we have our 1 at the high, our 0 at the new low, and then what we're looking for is a correction into the golden pocket region, which, as we know, is our 0.618 to our 0.786 Fibonacci. And off of this, what we're looking for is a rejection off of this before coming down, and that's exactly what we get. We get a double tweezer, a tweezer top pattern to the 0.618 fib, and then we see price accelerate downwards. So for this one, we did get a little bit of drawdown, nothing major, a couple of pips, and then what we have here is a 5.97 risk to reward with a, I think it was 39.7 pip stop loss, so just above this 0.786 level and any other major area of confluence. And then our take profit is down at significant support level at 0.97140, and also the minus 0.618 fib. Normally I would go for the minus 0.27 fib. However, I really do like this trade, and I feel like we can get a deeper move. We could also look at moving our take profit onto the channel for a longer term move for about 350 pips. But for now, I'm just going to sort of manage this trade as it comes, and sort of, if you guys are sort of active and do look at my Instagram, we can see I actually put this here. The picture isn't as clear on TradingView, but if we look through what we had, so like I said, a break of this channel creating a new low, therefore placing our 1 fib at the height of the channel and the 0 at the new low. We have price within our golden pocket, or just on the edge of it at the 0.618 fib, and can see price decelerating and possibly looking to form an evening star formation on the daily. So the evening star, of course, consists of 3 candlesticks. We have a bullish emerging, a spinning top candle, which is wicks either side of a thin body, and then the bearish engulfing for the confirmation. If we look, did we get that? We actually got a double. So it was kind of an evening star, but except we had a double spinning top or tweezer top pattern before coming down. So it was nearly correct. Obviously, the trade did pay off in the end. So obviously what I said was, if we see this pattern, we then have multiple confluences for the short. These being the 0.618 fib, the break and the retest of the channel, the evening star formation, or at least a double spinning top, signal reversal, and then I said the price could fall back to our favoured level of 0.99284, which is our strike level, which if we broke, I'd be happy to take it. And then there you go. There was my stop loss, my take profit, and my entry, and I gave it to everyone. So it was a free trade that you all could have taken and possibly made some nice profit on. So for now, I'm going to manage this appropriately. This is also risk free, so we can move that stop loss and remove all of our risk and be confident with our trade. So this one, if I just get my MT4 back up, it is running at around 100 pips. So really nice trades there. 200 odd pips in them, and now I'm just letting them run risk free. And both I'm very happy to keep, and I'm happy I gave them to the community. And obviously the USD Swiss I gave to the whole of Instagram, which is always great, and it's important for you guys to understand that the importance of that is that I showed you what I was going to do before I took the trade. So I didn't just show you a profit screen, I showed you what I was going to do before, and I showed you the result after, which is important for you guys. And as we can see on my next post, we actually had this. So we had the setups and the entry to show you that I did enter these trades as well, and then we had CAD-JPY and the entry as well. So just to prove that I did enter both of them trades, and sort of what I said was, you need to be able to practice what you preach, otherwise there's no point doing it at all. which is something I find quite important. If you're going to try and teach people how to trade, then you need to be making sure you're doing that as well. There's no point giving out setups if you're not going to take them yourself. So now, we're going to move on to the DXY, which, as we know, is our dollar index. So the dollar index is inversely correlated to the Euro USD, for example. So what this means is, as DXY goes down, the Euro USD goes up, and as the DXY goes up, the Euro USD goes down. So what do we have here? Then we have DXY in a channel. We have this ascending trend line at the top, and this ascending, the bottom ascending trend line here. So what do we have? We had a break of the channel as we went through. Would have been about a week or two ago. We went through that. And then what we was looking for is the new low to be formed, which we have at the equal to the other low, and then we had a retracement. So in this case, we had the 0.382 fib retracement, and now we're looking for price to make the next leg. So we have the move that we're looking for in order to have the fib continuation. So what we are looking at here is this massive shooting star candle. This is very important. This tells us that there's still loads of momentum, and we got another one on Friday. So I think there's a very, very high chance we're going to see some dollar weakness this week, with two shooting star candles in 3 days, and it's a big way to end the week. So I'm sure if we go on the weekly, we can see, yeah, exactly, we can see a massive shooting star candle. Look at that! Wow, 1, 2. So in the last 3 weeks, we've had 2 massive shooting star candles, and we can actually see retest the 98 level, which I was really going on about the other day, and then we've come down to our 97 level where we have this 50 EMA, and as we know, if we break the 50 EMA, we are going to go down a lot more. So based off this, what am I looking at? What else am I looking at? So what we're looking at here is obviously come down to the minus 0.27 fib after we break and retest the 97, and then possibly down to this 96 or this low at 95.85. So let's move on to Australian dollar CAD. Of course, I want to do these in alphabetical order just to make it a little bit easier for you guys to stay on board with. So this one I think I actually went through the other week, but we haven't really had the move, and actually went up further than I expected. So what we have here is our descending trend. We have the break of the trend line. We have a massive move to the upside. So what am I looking at here? Well, what I'm looking for is we've made a new high, so therefore what I'm looking for is obviously we have this liquidity area here, so this is what I'm expecting price to sort of consolidate around. So what I'm expecting is we have this massive emerging bullish emerging, spinning top with massive wicks of both sides, and then we have this sort of candle here which is showing indecision. It's basically another spinning top. So now what I'm looking for is price to come down, and using our strategy, made the new high, and I want to retrace into one of our Fibonacci levels. So this could be the 0.786, 0.618, which I favour slightly, but either of them could work. And then maybe even if we do get liquidity area rejection, then the 0.382, and I'll be looking to take this up for a couple hundred pips. So that one, I think it's going to be more of a couple of weeks more. I don't think it's quite ready yet, but it's definitely one to look at, and definitely one to sort of understand the strategy before we even start. So this is me looking at the strategy before we've even seen the trade move. It's just trying to predict what's going to happen. Of course, we have this 50 EMA as well, so we could look at seeing that come down a little bit further, or coming up to the 0.382 fib. Sorry. Next, we've got the Australian dollar yen. I think this pair I've gone over quite a lot, and obviously I did catch a nice short on it the other week. So now we have this descending channel, and then we broke it, retested, and come up. So you can see here we did develop this then a counter trend line, and then we broke through that. And typically I expected it to come down a little bit further, however it didn't. It's actually stayed up, but now we have sort of touched and fulfilled our minus 0.27 fib. I'm now expecting price to maybe retrace it a little bit more before filling the next movement. So we have price here, and what I'm looking for is price to retrace into the golden pocket region before making another move further to the upside, and in this case we might look for the minus 0.618 fib. And to be fair, I'm not as confident maybe as some of the others, but I still think this could be a nice move long term. Next we're going to go for Australian dollar US dollar, which looks quite nicely, and there's a couple of things you need to consider here. So first thing I'm going to do is I'm just going to sort of run you through this channel, and then I'm going to actually take you to another pair, and then we're going to come back to this. So what we're going to do is we've got this trend, descending channel here for months, since pretty much the whole of this year. We have this channel here. If I just slightly move this, okay. So we have we have this channel. We can see, I think obviously, as you guys will know, we had that New Zealand dollar a couple of weeks ago, and obviously Australian dollar and New Zealand dollar are very well correlated, therefore we had the same move pretty much. So we had this liquidity area here, and now sort of we've come up, we've broke through this other trend line, so we get rid of that, and now we've come up to the top of the channel. We actually have our 0.618 fib here, and what we're looking for now is either rejection off of this level, or we're actually looking for price to come down, rejection of this level and price to come down. Forget my arrow tool. So either we're going to be looking at something like this to the bottom of the channel. However, with this one, I'm not completely sure on the short, because there's something else we need to consider. So those of you who are part of our WEF, you would have seen our smart tips videos, and you will know why I'm looking at gold. So why am I looking at gold and talking about Australian dollar or the New Zealand dollar? Well, gold is one of the main Australia and New Zealand are big producers of gold, and therefore as the gold price increases, so does the price of the Australian dollar or the New Zealand dollar. And as we know, gold is also an anti-dollar pair, so therefore if gold's increased, we know dollar's going to go down, and the Australian dollar and New Zealand dollar will go up. So therefore they're perfect to look at. So looking at gold, and I haven't really covered gold in a while, but I've been watching it lately. I'm trying to get back into it because I've had gold's on them pairs that it will either make you or break you. And unfortunately for me, it made me. I made a lot of pips off of it, and then I sort of had a couple times where I got too brave and I sort of went in a little bit too risky, and it taught me a lesson. So as you can see here, we've got this trend line: 1 touch, 2 touch, 3 touch. And then we looked to break out, we faked out with this evening star formation, so perfect, bullish engulfing, spinning top, massive wick to the upside, and then bearish engulfing. And then what we did is we come down to 50 EMA, faked out the 50 EMA, now we back up, and now it looks much more solid to go higher. So what we have here is the 50 EMA trend line, and then also the 1500 support level. So I'm actually anticipating gold might go a little bit higher, and it might even return some of these highs before. So that's sort of what I'm looking at gold. So obviously, if we're increasing on gold back to Australian dollar, US dollar, the chances are that Australian dollar is going to follow gold. So therefore, what we might even get is if we break this fib, then we can get rid of this fib and we can forget about it, because we're actually going to look at coming up higher. So we might even come up to this 0.7500, which is about 140 pips away from where we are now, or we might even come a little bit higher. So with this, I'm sort of anticipating both ways. You need to have multiple confidence in either direction, and then look at pairs like gold to sort of give you direction. Obviously DXY. Obviously DXY, we are expecting a little bit of. We are expecting this to sort of have a bit of correction here, and then possibly down to our minus 0.27. So we might even see price hover around this area for a bit. Okay, moving on to Euro JPY. So this one, using our strategy once again. So here we can see this long-term channel since around this time last year. Not really tried to break it. We've had this little fake out here. However, now we have actually broke it. So now if we look on this sort of level, we have 1, 2, and now I'm anticipating a third touch. So this exact analysis you're going to see on a couple of pairs, because there's actually quite a few pairs that are correlating quite well, and they're sort of coming up with the same setup. So we have here 1 touch, 2 touch, and then, like I said, we're looking for the third touch. So ideally, it would be on the 0.618, because this is a retest of the trend line that had been broken, and then also deeper retracement for a golden pocket, and then also it's going to probably touch the trend line. However, we might not come down that far. We might see a little bit more correction. We might only come down to 0.5 fib in the trend line. But either way, I'm anticipating a touch of the trend line and a bounce back up higher. So if we come down here, we're looking at 118.774. and then up to around 122.645, so around 380 pips, I believe, 390 pips, which would be a massive move again. So that's definitely one to look out for. I think obviously the setup's pretty simple. Sometimes you don't have to overcomplicate it. So just to go over that once more: trend line, 1 touch, 2 touch, looking for a third touch off of the correction, and the retest of the initial longer term trend line. A third touch of the new counter trend line, and also touching our golden pocket area. Now, let's move on to Euro USD, which obviously inversely correlates with the DXY. Firstly, let's look at this channel here. So we have, if we look, we've got this longer term channel, as we can see here, and then if we come onto the more recent time frame, we have obviously the bottom of the channel here, top of the channel here, and then this trend line which we broke. So we broke it. We've now come up, made a new high. This was sort of, it looks like we might be making a double top here. So if we are making a double top, then we might see price retrace to maybe the 1.111 or even into our golden pocket before moving higher. But obviously we have got our DXY looking very weak, and obviously our DXY is moving downwards towards our minus 0.27, and our euro US dollar is moving up towards our minus 0.27. So this is also a liquidity area, so we might actually see, naturally, as they're inversely correlated, they might make the exact same move. But apart from that, there's not really too much for me on the euro USD at the moment, and not sort of any long-term swing moves. Okay, so as you probably noticed, euro JPY and GBP Australian dollar, which we're covering now, is pretty much the same setup. We've got more touches here, so it's a little bit of a stronger trend line, and it's actually going to be a bit of a deeper retracement, which is what we like. The deeper the retracement, the more chance of correction. So what we can have here is this trend line, and then this, if we come a little bit zoomed in, we have this massive move to the upside, which naturally we need some correction. So what I'm anticipating here is new high was made, so we put our 0 fib here, our 1 fib at the most recent higher low, and then we look for a retracement into our golden pocket region. So what we're going to have here is, if we come back out, we can see I've got this liquidity area. I've got a few here. So we've got this one firstly, so 0.618 level, so Fibonacci. And what I'm looking for is price to continue this downtrend. If we actually put a trend line on it, we might be able to see a little bit of a pattern forming. Okay, so nothing too clean, or sort of as maybe we'd like it, but we have got sort of this. If I just clean that up a little bit for you guys. Okay, so something like that, which we might see sort of come down and then touch nearer this region and then come up. But mainly here, we're looking at price coming down, correcting, and then coming into one of our Fibonacci regions, preferably the 0.618. If it does come down to 0.786, we've got to be careful, because it might just be a fake out. Sorry, it might break further. But obviously, what we might see here is price come down, break through this trend line, fake out, and then come back higher. And then actually what we will see is price come up to the top of this channel. So you can see this long-term channel here. Oh, so you can see long-term channel, and then we're looking for price maybe to come up here. So a nice sort of 600 pip move, at least 600-700 pips. So it could be a massive move as well. And as I've always found, the pound Australian dollar moves massively every day, so you can always get quite a big move on it. It's quite a nice pair to trade, one that I quite like to trade. So that's pound Australian dollar. Now pound JPY, which is the exact same again. So as we can see, fib retracement, 50 EMA. So we've got this descending trend line, which we can see we broke out of, made a new lower high. New higher low. Made a massive impulse move to the upside, and then hovering around this 140 level, which is actually our 0 fib, which we can apply here. And then what we're looking for now is a retracement into the 0.618, and then also we have this 50 EMA here, so we can see price coming down, and obviously we do have this liquidity area slightly here as well. So then what we're looking for is them sort of confluences. Is what we like to see. Multiple confluences back up. I traded it and go further up. So another massive move there. So like the other one, possibly, what's that, 700 to 1,000 pips. So like I said, GBP, JPY, always a massive mover, and therefore something we can look at. So next, let's go to New Zealand dollar, US dollar, which is similar to Australian dollar, US dollar, except it's sort of hovering around this liquidity zone. So anyone who would have watched my videos right at the start, you would have seen that I had caught the New Zealand dollar, US dollar move, and we had this long off this monthly trend line. I actually got taken out of that trade. I think it was around here or something, due to retracements. I still made a couple hundred pips on it, which is obviously what we aim to do, and anything's better than no profit at all, or even a loss. So what we're looking at here is price to come up, break, come back down, and then make a move to the upside, which it did. And then what we're looking at here is either rejection and come back down, or to break through this liquidity zone like we struggled to before, and here and then break above, and then make a move to the upside, which if gold increases and the DXY weakens, we can potentially see. But for me, there's no move sort of on this pair. I'd focus on Australian dollar, US dollar more. USD CAD, same setup, again and again and again, but now we're closer than we've been. So actually, I think I tried to get in short last week, and I might have got taken out. I'm not sure. Yeah, I got taken out. I think it was only like 20 to 30 pips. And then what we've got is, so break of this trend line, come back up, retested the 50 MA, and then now we're looking for a break to the downside. So once again, that even star formation, except the bearish emergent isn't as big. But potentially we can see, I'm looking for a break of this 1.31304, just to sort of give us some substance, just to give us a little bit more of momentum, breakdown, and then retest. But once again, another massive move potentially. I think something that I'm going to keep reiterating because there's so much potential in it. And obviously with the USD looking so weak at the moment, it's definitely one to watch. Okay, last one I'm going to look at is USD JPY. Right, we're looking a little bit messy. Let's take away this. Okay, so this trend line, we also have multiple Fibonacci levels. So as you notice, we've got more than just a normal Fibonacci. Let's take this one out and 0.7. Actually, keep this. Okay, so what I'm looking at here is either one sec, just check it. Okay, perfect. Okay, so yeah, what I'm looking at here is we can see we've got this trend line that's been formed, 1 touch, 2 touch, 3 touch. And now what you can see is price attempted to break out, but we have got the 50 MA, so we're going to need a bit more momentum. On a Friday, people are taking out their profits. We're not going to get that. And obviously, if we're under DXY, it's consolidating at 0. So if we can get that minus 0.7, we might come down. And then what I'm looking for is price to come down and then come back to this trend line that's held since 2013. So as you can see, long-term trend line. So it should be quite strong. Obviously, price did try and break out, made an inverted head and shoulders, and then made this move to the upside. Have this liquidity area here, so obviously we broke, we come up, tried to test this liquidity area up, failed, come back down, broke this, or potentially trying to break this trend line, and the 50 MA. If we break that, then I'm looking for a retracement down to 0.5, which Fibonacci, which aligns perfectly with our trend line, and then a move to the upside towards 110.140 support and a minus 110.140 resistance and a minus 0.27 fib. And then that's sort of all the pairs that I'm looking at. Obviously gold, I'm not really looking to trade, actually use it as a confidence for the others. Let's look at oil finally, just to see if we can have an idea on the CAD. So as we can see, just sort of off of a blank chart at the moment, we can see price sort of consolidated, made a massive move to the upside, faked out, come back down, and then this 51.59, it's retested, come back up. Now it's over around the 55. 55 is quite an important level. As you notice, sort of 50, 55, 60, they're all important levels. So potentially with this break above the 55, we can maintain 55 and go up. We can see the CAD increase, which obviously is good for our Australian dollar CAD to get into our golden pocket, and also our USD CAD for that longer term move. And that's everything from me, guys. So I hope this video has been helpful. It's nice to get back on the charts and do another video for you guys. Any questions or any comments you have, leave a comment on the video. Obviously, I will upload it. I will put some of the setups on Instagram as well. If you do catch any of the moves, please at them to me on Instagram or message me them. It's always nice to see people taking advantage of the moves, and especially when we can catch them as a community. It's always more important. So have a great trading week, guys. Catch loads of pips, and I'll see you guys later.